Hi everyone, welcome again to another financial analysis video with myself, Moeed Amin, and my colleague Ted Weinman. Today we're looking at 888 Holdings, first company in the gambling industry that we've been looking at least for this show. We're excited to share this with you. Just a quick note about 888 Holdings. So as I said, basically they're a gaming company and they specialize in online gambling games. So think, casinos, sports betting, bingo, etc. UK business, and based in Gibraltar, as you saw. And this is a request from one of our viewers. So thank you very much to Double Dig for your request. Here is your video, and this is an important note before we go into the finances. Don't forget to like, share, subscribe, especially the share and subscribe, because firstly, we're a community and we're sharing this amongst people who really want to get more financially literate. Warren Buffett said, if you want to understand business, finance is the language of business. So if you want to understand business, you've got to learn to speak the language. So this is what we're helping people to do. The second thing about the subscribe is Double Dig. If you're a subscriber, then you will receive notification the moment we publish this video. So you don't have to waste time searching for it. So do so. So before we go into the finances, a little note about the stock price. So they are, they've been around for quite a while. They went public in 2005. And what's interesting is if you held onto the shares since then until now, you would have seen about a 3 times return. So quite a decent return, actually. However, it was not a smooth ride, and we'll show you later on what that ride looks like. But if you did invest it 12 months ago and held onto the shares until now, you would have seen almost over 200% return, right? So timing seems to be quite important with this particular business. So let's go into it and show you the finances. These are retrospective numbers. So this is not about looking at the future. If you want to be able to invest in the business, one of the things you've got to look at are the fundamentals financial analysis, and we're going to help you with that. So Ted, let's share with everyone what we found out about this company.
Yeah, good to see you, Moeed. Yes, thank you very much. So just to reiterate, we are, of course, looking at the financials, the financial statements, the annual report and accounts, and this is available to see on their website. So just type in 888 Holdings Investor Relations, and you'll get all the information you require. So this is a backward-looking analysis. We're not looking at the future, the potential new acquisitions. I know they are in the news at the moment. I think they've just bought William Hill. I'm pretty sure that that's 888 Holdings. So, none of that is in these numbers, and we're not speculating about that. So if you're an investor using this, then you got to do your own research, I'm afraid. I'm not going to do it all for you. But what I am going to do is to provide some analysis. You'll see on the screen, I'm scrolling through the annual report and accounts. We haven't actually got to the numbers yet. And so if you are looking and you want to know more about this company, you probably need to read the first 100 pages or so of this company, which will tell you about the strategy, the board, what they're doing, key metrics, how they've performed, etc., etc., etc. And you don't need me to read it for you. So here we come down to page 113 out of 156. So we're well over halfway before we actually get to the numbers. And that's what we are going to be looking at today. So top line, you'll notice we are dealing in US dollars, millions. So the top line, the revenue, that's the sales, the income, the turnover is a total of $850 million. $850 million. 52% up on 2019 when it was only $560 million. Now, we've looked at companies which have been growing rapidly before, and some companies are growing through acquisitions, some companies are growing organically. By organically, I mean they just win new contracts, or they win new customers. These guys are growing through acquisition. Okay, so their growth strategy is to go out and buy. I mean, they'll be doing some organic as well, but really it's about buying other companies, other gambling companies that they can plug into their infrastructure, cross-sell within their kind of their existing community, etc., etc. Okay, and as we talked about, they are in the news at the moment. William Hill has either been bought or about to be bought, and that again shows part of their ongoing acquisition strategy. Cost of sales, gaming duties. So here, this is a kind of, this is a gambling tax basically, and then the other cost of sales relatively small, because effectively it doesn't cost them a lot of money to actually run a gambling, an online gambling, for example. So this will be kind of, the people kind of running the algorithms and doing the programming, etc., etc. So gross profit, $563 million. That's a 66% gross margin. That's massive. However, they have lots of back-end costs, and these back-end costs means that they're only making a $32 million profit, a little bit down from the previous year, $52 million. So this is really driven by their back end. Look at this marketing expenses. Look at the increase in marketing. So these guys are, not only are they growth through acquisition, they're trying to grow through organic, and that'll be the marketing expenses. So that'll be the kind of, when you get home from the pub and you sit down, you sort of think, I'm going to eat my kebab and watch a bit of TV. There is the kind of the advertising for the gambling industry, and they're trying to hoodwink you after you've had far too much to drink, to kind of, to indulge in a bit of gambling. If nothing else, and this is not a kind of a moral crusade, but if you are thinking about gambling and you reckon you can win, look at these numbers. Okay, there's only one winner in gambling. It's the house. Okay, and all the odds are stacked in their favor. However, it's quite fun to have a little bit of a punt once in a while. So gamble safely and be aware, and don't overcook it. Okay, so a little bit further down the line, we've got a little bit of, so you'll notice here, financial income and financial expense, basically zero. So, there's no debt sitting on these guys. They're paying some tax. Even though they're based in Gibraltar, they're trying to keep their tax as low as possible. And so the net profit, $11 million, down from $41 million, 7% previous year, 1% net margin this year. Pretty low. It really is. It is a pretty low number. $11 million on 850 million turnover is 1% net margin. Scroll down to the balance sheet, and what do we see in the balance sheet? So up here we have our these are the non-current assets, so tables and chairs and plant machinery, equipment, computers, things we need to run the business. Biggest number by far, goodwill and other intangibles. So note 11 will tell us a little bit more about that. There'll be some software. They'll do a lot of programming, for example. They program a new gambling game, for example, and then that's an intangible asset, and then they'll amortize it, which is another word for depreciation, over how long they think that game will be of interest to people before so they have to come up with new games to kind of keep people interested. But the biggest number there will be goodwill. So these guys are growing through acquisition, and when you buy another gambling company, you get the assets, but there are no assets to a gambling company, and therefore you're really buying the punters. You're buying the people who are committed to that, and you're buying their revenue stream. So $212 million of basically goodwill. Lots of cash sitting on the balance sheet, so very, very healthy cash position. Total assets $490 million, so it's looking pretty strong on the top half of the cash of the balance sheet. Have a look at down the bottom half. We notice that the current asset, now this is quite interesting, the current liabilities are actually greater than the current assets. Okay, so traditionally this is a warning sign to us. This says, oh, hold on a sec, do they have liquidity problems? They've got some trade and other payables. You'll notice there a little bit of customer deposits. I'm not convinced it is, and I don't know the gambling industry that well, so I'm not a kind of an expert, but these guys do have very strong cash flows, and I'm pretty confident that they can use that cash flow in order to, there's no kind of, they don't sell today and then collect, 3 days later, for example. You've got to put your money where your mouth is, literally, for this kind of a company. So very strong cash flows, and I think that allows them to operate at a negative working capital, and you'll notice they were doing that in the previous year as well, even to a greater extent. And the non-current liabilities, here we go, no debt at all. Okay, so there's a little bit of kind of lease liabilities on leased assets, but really there's no debt, there's no long-term liabilities to talk of, and therefore when we look at the equity, we can see the equity very, very strong, $150 million of equity, and it's all retained earnings. So this is a very profitable company. It's a profitable company. It's not making massive margins, but it is a profitable company, and that is what it's using to fund the business. Okay, so it's but you mentioned, I think that they there was an equity issue to for that acquisition as well. So really they're not borrowing money to fund their business, either through acquisition or for the day-to-day operations. Here's their movement in equity, and we notice so we can see the kind of the profit figures coming in. There's the profit figure for last year, there's the profit figure for this year, and what these guys are doing also is that they are paying out dividends. So if you are an income investor and you like dividends, then this could well be a company for you, as long as you are happy with the moral implications of investing in a gambling company. But sometimes in investing, we need to leave our morals at the door. Strong income coming out from these guys, and that's a pretty healthy dividend payment. So it's pretty much all of the profits are being paid out, which looks pretty good. And so we come down to the cash flow, and we see from the cash flow, very, very strong cash flow from their trading operations. So these guys are, they're low margin, but they are generating a lot of cash. And in terms of what they're doing with that cash, what we see is, really very obvious. This acquisition. There's a bit of property, plant, and equipment going on, relatively small number, but you'll notice here lots of buying, BetBright, Costa Bingo, 888Holdings, which almost guaranteed is another gambling company. They sold out of somewhere, etc., etc., etc. So and this internally generated intangible assets. This will be the software development that they're doing. So they've spent $18 million paying their employees to code new games, for example, and they are then capitalizing that cost, and that's fine, as long as they can kind of afford it, as long as they can actually generate the as long as those games are going to work. You'll notice down here, repayment of loans. So effectively, they did have some debt last year, and they've gone pretty much debt free. So that's actually sitting in the current liabilities, the debt, and they now have almost no debt at all, because they are generating lots of cash, and they've got lots of cash sitting on the balance sheet. So it's not massive. It's not massively profitable in terms of profit margins, but strong balance sheet, lots of cash. Growth through acquisition, it's all looking, it looks fine to me. There's no kind of warning flags. There's nothing which would make me nervous. If I was doing business with these guys, I'd be quite happy to to extend them credit terms, for example. Let's go back and look at the share price. So we mentioned the share price before. Quite a rocky ride. If you were an early investor, you'd have had to kind of hold on. Moeed, you mentioned, if you'd invested when it kind of, when it tanked down. So if you'd been sort of able to get in, when the coronavirus really hit, and then you'd ridden it all the way up, you'd be sitting on a very high, healthy profit. But then if you'd invested here, you'd have sat on a very healthy loss. So don't try and time the market. And this company is really a reflection of that. You can day trade them, but day trading, from my perspective, is a mug's game. Most people lose money on it. So this is really kind of long-term investment. And what we're trying to show here is, value investing. Is this a company which over time is going to go up in value with the right metrics, so to speak? But this company has been going up and down and up and down and up and down, and then up and down and up and all up, etc., etc. So it has been a very, very rocky ride. Market cap 144 billion, sorry, 1.44 billion dollars. I think, no, we're in pounds, so 144 billion dollars, sorry, pounds. So, you know, really, it's, you know, it's a massive premium to the net asset value. But as we said, a gambling company doesn't really have any assets, and therefore you're not really buying the assets of this company, although there's a lot of goodwill sitting there, but you're paying a very, very high premium. What I think is interesting here, the PE ratio is quite high. Okay, and that was actually, I think the comment from Double Dig was interesting PE ratio. What do you think? 120 times earnings. Yes, it is high, but then the earnings are very, very low. So the earnings were 11 million, and I think, you know, we're kind of, you know, that's a reflection of that, of the low earnings, if that makes sense. Previous year, $42 million. If they come back to that, then the P ratio is going to correct accordingly and will become much more realistic. What I think is really interesting about these guys is this number here, this dividend yield, 3%. Okay, we live in a very, very low interest rate environment. These guys are paying out $40 million a year of interest. Is it affordable? Can they carry on doing that? Are they going to carry on doing that? Does that give me sufficient yield for this company? If you're an income investor, it looks quite a good yield. I think that P ratio is going to come down, and I think it's going to come down because their profits are going to go up, and I think their profits are going to go up because I think the net profit for 2020 is uncharacteristically low. That's my kind of gut feel, but I'm happy to be proved wrong on that. They need to make sure that they're, you know, it's driven by that sales and marketing, that big increase in sales and marketing, which is, you know, and it's a competitive industry. You know, that there are lots of gambling companies out there, and if you think about it, why do you choose one gambling company over another? It's not the price. Okay, so it's not the price. You can't see the odds, or you don't, you know, you can't really you know, compare the odds. They can't say that, you know, you're more likely to win on my blackjack compared to you know, I know Betfair's, for example, and therefore it's a kind of, it's the appeal. So does the game work for me? Do I enjoy it? Do I like these guys? Is the software working for me? A lot of it will be familiarity. Once somebody's in, they enjoy it, they'll stay there. So it's kind of, you know, they'll have very sticky customers. So you know, that's really where the sales and marketing is coming. So I think it's an interesting company. It doesn't look massively overvalued. It's expensive, but it doesn't look massively overvalued. Nice dividend yield. Don't worry too much about the market cap, but be prepared for a bumpy ride. You know, if you've been on this, you've had a bumpy ride in the past, be prepared. So I wouldn't be kind of, you know, putting your money into this if you're planning to kind of, you know, just park it somewhere to pay for next year's holiday. But if you are a long-term investor or you are looking for long-term income, then this might be a good part of a well-diversified portfolio. It might be, and that is, of course, my opinion, because I'm not qualified to give advice, Moeed.
Great analysis, Ted. Nothing else to add apart from, you know, don't forget to like, share, subscribe, and especially if you're a subscriber, you'll get notification of videos, and you'll see the videos that you've made requests for. So love to hear everyone's thoughts. Anyone who's an expert in the gambling industry or the technology and software behind gambling, you know, if you have anything to comment, please do so. We're a community that we're educating each other. So it'll be great to have your input. So until the next video, thank you, Ted. Thank you, everyone else. And do keep your requests coming.
Good to see you, Moeed. Catch you later.